Welcome to this week's Fireside Chat with Jesse. I'm joined today by Michael Kianmahd, CEO of Maxim Commercial Capital. Thanks for joining me, Michael.
My pleasure. That's a perfect pronunciation of my last name.
First shot too. So yeah, rock and roll.
Crushed it.
But I'm glad I asked you like 10 times before I hit record. But
When did that happen?
but thanks for joining me, Michael. Glad to have you on the program. Excited to learn more about your career and Maxim Commercial Capital. So I guess we'll just kind of jump in here. And do you mind just kind of introducing yourself and your career to date in equipment finance?
Sure. I'm Michael Kianmahd, CEO of Maxim Commercial Capital. Maxim was founded about 16 years ago with the mission to support non-prime borrowers in the heavy equipment and real estate sectors. Um, I joined the company in 2012 after a couple years from JP Morgan. I was in the commercial bank doing real estate banking. I got promoted, had a kind of exciting career ahead of me, but I kept looking over to our clients and always thought that clients had more fun. And my father had started Maxim with a few partners, and they were growing, and they needed some support, especially around the real estate piece. So we kind of discussed what that might look like. Seemed to make sense. I joined and have kind of never looked back. It's been really an exciting time.
Perfect. I'm sure that made your father happy too, right? I mean, we all care about legacy, right?
I won't speak on his behalf. No, it's been so rewarding. And I think I don't know if there are many family businesses in equipment finance. I think there probably are, but it's a lot less common. It's kind of more common to be partnerships. But I think the depth of a relationship that you can form with your business partners only is more interesting and more complex and kind of more thought-provoking when you work with your dad or when you work with your child or you work with your husband or wife or partner. So it's been interesting. I think it forces you to grow in a lot of ways also. So I'm grateful to him and to the opportunity, and just I feel like a very lucky person.
Sure. And then I mean, I just think of that dynamic, right? I mean, the only analogy I can kind of have is coaching my son's baseball teams. Like I am more harder on him than any other person. So I just gotta sit there and it's like, you know what, I expected that from him, but Michael, come on. You know, and you can't really escape either. It's like, where are you gonna go for Thanksgiving? Like, come on.
You know, it's 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 funny you say that. So when you coach him, does he does he take coaching well? Does he take the feedback well? Are you playing the role of coach and dad, or just dad?
Just straight coach.
Yeah.
Because otherwise they sit there and they look at you for hey, did I do a good job? Hey, did I do it and like that? Or, you know, you watch Strike Three and it's like, oh, that's, and I'm like, dude, no, treat you just like I treat everybody else and just harder on you because, you know, you're my kid and no one's gonna correct me from from being harder on you or
Yeah,
give me a hard time.
I think that's kind of where I think the wisdom comes is like you kind of have to know like what role are you playing? Are you playing dad? Are you playing son? Are you playing partner? What are we solving for? What are we optimizing for? And I think that's where the complexity is. And I think it could be very healthy. It doesn't have to
Sure.
be unhealthy. It's not a negative thing. It could be very healthy. So if you both value it being healthy, just like any other partnership,
Yeah.
I think it's just, because the key foundations are there, trust, respect, love, appreciation. It's really cool, honestly.
I mean, I've taken Jeremy to a handful of EF Cares events because I want him to get familiar with this industry because I've been in it for 20 years and I love it. I'm never going to leave it. So it's nice if, you know, him or Rory kind of follow in the footsteps and get into it. At least they'll have a foundation.
Sure.
But yeah, it also is different levels of complexity from a just because they're your child or that's your dad. Still has to be that level of just peer respect too of a coworker.
Totally.
And
Totally. If you
yeah.
want, Jeremy to get his feet wet, but not directly through you, you can kind of send him on a tour of duty with somebody
Oh, I
you
already know. I already know where I'm going to put him. Like I'm going to throw him through Beacon sales like programs.
Boom.
Like yeah, you
There you
start
go.
go collections, then dial.
And then I think the play might be is fund a leasing company firm or something. I think that's your retirement plan, you know? Like
Let's do this. We got this.
uh,
That's awesome. Well, yeah, and I'm sure going from JP, where it's, you can set the world on fire anywhere you go, but at least now at Maximum, you can actually do more things. So that was a little easier.
yeah, totally. I think like, first of all, the experience at JP Morgan was an incredibly valuable one, amazing one, interesting one. Um, you know, the way that started was there's like a 10-week training program in Chicago, and then you kind of learn with a pool of candidates, and they kind of teach you not how to do the job, but more about the company and how the company is and who the people are and what the culture is about. And you're around other people that also recently graduated college who are all really smart, who all passed the tests and sort of got the job. And you kind of develop a peer group. And I'm still in
Okay.
touch with some of those people, which is also really cool. Um, and I think it teaches you kind of how to do that at scale. Like when you're big enough and you've got 35 different analysts starting across the country, across the commercial bank, how do you level set the playing field for all of them to kind of make maximal impact day one? Well, it would make sense to put them through like a corporate training program and have them meet with executives and maybe they get a chance to meet, a pretty high ranking executive and kind of start networking and kind of building their networking skills and kind of learning throughout the organization. So I think what was really cool about that experience is I got to see how it was done at scale. And I think what I had in my mind when I came to Maxim was, okay, like JP Morgan was also a 7-person company at one point. Um, and after 150 years, they got it to where it was. Like there's a playbook, it exists. I kind of saw the end state or kind of where they were in their evolutionary cycle.
Cool.
And that was kind of inspiring in many ways. So,
Well, so I mean, you only have what 139 years to go, and we'll see. We'll see where that's at. See where it's
we'll see if I make it that long. I hope so.
at. Thank you for that.
Becoming more possible, it's interesting.
Hey, you never know, and we all need a goal, right? We all have to have that at the end in mind.
Yeah, I'm not sure I
Um,
want to, but we'll see.
and you touched on something there, the training program that those bigger companies, you know, kind of put you through, as opposed to, I mean, there's not a lot of equipment finance organizations out there that put you through the training that like GE used to, or Great America is kind of the one that kind of comes to mind in regards to how they do their training for all new employees. So it's good that you're able to get that and have that peer group. That goes a long way.
Yeah, and it was more of like a generalist education and credit. It was kind of, of the kind of subject matter expertise, like aside from like learning how to put a proper credit approval package together and what approval hierarchy looks like at the bank and how they score things. Because there's a credit risk model and credit policy that you have to follow as like an analyst that, the VP signs off on and eventually the chief credit officer. So this idea of like packaging information so it's understandable across the organization. And, somebody might touch that deal 10 years later after it's a problem. And if you're not there and you didn't communicate any information about that deal properly in a way that that person can pick up where you left off and carry forward, it might cause a credit risk for the organization. So, if you're running a credit business, you got to think about credit risk. And I think it's those types of structures that kind of create at large organizations that can set them apart. And I think JP Morgan was, especially at the time and probably even more now, in pole position to kind of be the buyer of Bear Stearns and Washington Mutual and First Republic. And, you know, it's an inspiring place. So grateful to have been there.
JB Diamonds, this
Yeah.
guy's kind of one of a kind, man. So
The
I
The Last
understand.
Man Standing is a good book. You should
All
book.
right, you might have to text me that
Yeah.
so I remember it. Okay. Last Man Standing. Got it. Or I guess I can just watch it out here and say, okay, what did he say? But Do you mind kind of introducing Maxim, if you don't mind,
Sure.
Michael?
Sure. So Maxim is a family-owned specialty finance company. We focus on providing capital to small and mid-sized businesses. We're very collateral oriented. We focus on kind of asset classes and markets that are not really served by your traditional lenders. So we're an alternative solution. Um, we do essentially three things. We finance heavy equipment. Um, the heavy equipment segments are today, and in time, I think we'll grow them, are long haul kind of OTR trucking, vocational trucking,
Okay.
and short haul local. The third segment is construction, and the fourth segment is agricultural. We also have the ability to finance real estate as collateral. So oftentimes, a lot of these businesses will come to us, and they're not necessarily a heavy equipment business, but it might be, let's say, a dentist, and the dentist needs some working capital, or there's some merchant cash events they need to consolidate, or there's a multi-use capital need. Like there's an equipment component, a debt reconsolidation, and they also need working capital, like extra cash just kind of sitting around. We could provide that solution, and we do that up to $3 million of finance amounts. We're application only, kind of on the smaller side, so call it up to 75,000. We start looking for financials past that size just to kind of make sure that what we're lending into will make sense for the borrower.
Sure.
And we also have a full financial package where we're, structuring the deal as I described. Um, it's been really interesting. We take pride in what we do, and we look to help people, and it's very interesting.
Well, and that's a market that people don't really understand. They're like, oh, doctors, dentists, they have unlimited cash and whatever else. And a lot of times these people don't have the best credit because they're sole proprietors.
Totally,
And
yeah, totally. And it's actually that's often true. I mean, there are definitely some that have stellar credit. But
sure.
what ends up happening is like a small business, a lot of the weight of operating that business is on the personal balance sheet of the individual.
Right. And then people don't understand that where it's like, hey,
No,
look, like my credit score is like 825, but if Consult Disrupt wants to get a loan, they're like, what the heck? Like, what is this? Like everything else, because it's all like me. And it's like,
yeah,
what do you expect? So yeah, get it.
totally. A lot of people they like, they'll use credit cards, right? And then if you ratchet up your credit card usage and your availability goes down, it hurts your credit score. And if your credit score is hurt, it kind of limits access to capital. And there's some programmatic folks that they do it really well, but they're not really paid to take risk in the way that we might, or that we've figured out how to do it. And I think there's a place for everybody. So like we're kind of like the auxiliary, doesn't fit in your traditional bucket solution. And, we have a customer profile and they deserve capital. They're generally good risks. Um, it's not your A lender. It's, B minus and below, let's call it. But it's a meaningful part of the US economy. Like we estimate that in our segments across those four food groups of equipment that we lend to, um, it's about $35 billion a year of used equipment sales. 20% of that segment is non-prime, which is about 7 billion a year. So, just do the math on what 1% market share is $70 million a year of originations. I'm pretty sure we could easily be the home for one out of every 100 deals that exist in that segment. Like it's not, I don't think it's that hard of a goal to set or exceed. Real estate is another 50 billion, you know,
Uh,
so that's also a very large segment. And I think, for a small business, there's some interplay between what somebody might own in the business, what they might own outside of the business. And I think this opportunity really, I think there's a long, long, long road ahead of us. Like there's a lot of opportunity. There's a lot of white space, in my opinion.
sure. and it's much needed capital that small businesses need. So
Yeah. There's also another kind of interesting aspect about the market we're in. So the classic mistakes a lot of banks and lenders make is in good times to compete, they compete on risk.
yeah,
Sorry. In California,
it's
we
okay.
like lights to turn off if we don't move. So
Hey, it's okay.
yeah. Um, so, in good times, people get comfortable, they take more risk, they kind of can compete for that last dollar, they want to grow originations, they lower rates, they kind of don't realize always what they're doing in kind of a holistic way. And then you have some sort of credit cycle shift or an economic turndown or something changes structurally in whatever industry they're funding. And
Sure,
all of a sudden, like the rug gets pulled out and they just kind of like, they don't like step away, they jump out. And when they're out, there's a vacuum. And the vacuum generally is not met by anybody else because there's kind of like a herd mentality that occurs. So I think, the other way that we kind of really try to focus on running this business is through cycles. Like we want to be a provider through all cycles, good and bad. So if things are super hot, that's fine. We'll be around. If things are super cold and scary, we'll be around. Like we're kind of building this to kind of exist, just as JP Morgan has in other firms. So,
sure, sure. I mean, that's I'm gonna circle back to what you just said here. Actually, I'm just gonna go right into it so I don't forget what I'm thinking about. So cyclical, right? So you joined the firm in 2012.
mhm.
So I guess the traditional trajectory, I guess, of over the first what 12 years or maybe say 10 years was probably just this. And then, it kind of plateaued, and I'm sure right now peaks and valleys, OTR, and some other things. So, are you leaning on some legacy knowledge there of what's kind of happened in the past and they've seen other, because in your lifetime, you probably, I mean, in equipment finance, you probably
Totally.
haven't seen a true dip yet. So,
It's interesting. So, my father had founded a predecessor finance company in the year
okay,
2000.
okay. All right.
Yeah. So, and I am like your son. I'm interested in what dad does for work. Uh, and I've always been kind of like just passionate about business and kind of committed to learning as much as I possibly could and all that. So I would go to work with him and I'd learn from him and I'd hear him on calls and he'd include me in business meetings and like I wouldn't say I knew anything at that
No,
time. Yeah, but like I was paying attention and got involved kind of tangentially and learned as much as I possibly could and kind of saw what that market cycle was like in '08 and in '09. I was still in college, but we made some other investments, non-finance related. So we were acquiring notes. We did some note acquisitions. We kind of traded notes, which were interesting. We bought a portfolio from the FDIC. We underwrote billions of dollars of available notes that were available. And it was weird. Like banks would go under and notes were being sold for 60 cents on the dollar, which was 50 cents on the dollar of the true value of the assets. And that only happens in major credit disruptions. You have liquidity issues, you run on the bank, you have, kind of fear in the streets
sure.
and people kind of running away. And, um, those are really interesting times to be putting capital out. And I think that was kind of, on the one side, I saw kind of that other finance company that was heavily transportation oriented, starting seeing distress in '06. And then it kind of peaked its head in '07. And then it got really bad before the full market turned, because I think there's like some leading indicators about transportation that
Sure.
is pretty unique to transportation. And on the same side, like there was opportunity in it. So, and we kind of had the opportunity to play both sides, which was interesting. So I would say like that was kind of the first real cycle, and that was
Yeah.
modeled on the RTC bust, which was like 92. You had an SNL crisis, and a bunch of billionaires got minted because they were able to get money pretty much for free from the government or from wealthy families, and they just bought pools of assets. They oftentimes sight unseen, and all they had to do was asset manage their way out of it and generate a return capital back to the seller, and they got to keep upside. So there's a playbook, as I mentioned, you know.
Yeah, I guess. And so much for my question. I bombed that one. I didn't do
No,
my
no, no, it's a
research
great
on it, man.
question.
So,
No, it's a great
yeah, like, all
I
right.
asked myself that question. I was like, how do I make sure I'm prepared? I've never really been in it. And like all you have to do is just go look around, you know? It
So once you
exists.
graduate, so you graduated college, then I guess on the backside of that, like 2009,
I,
2010,
I
2 years
graduated
in JP.
2010.
So
Yeah.
it must have been an interesting time to graduate, right? Especially if you went into like a business because you're just like, wow, well, this stuff just what's
Yeah.
going on?
Yes. So I guess the first decision was like, do I want to go work outside, like kind of in the market and not be in any way connected to the family? Or do I maybe do something entrepreneurial within the family or related to the family, whatever. And it was important for me to do something outside. So, but it was a really hard time to find something that was a reasonable thing. I remember interviewing um, for a position at CBRE Investors. And it's, CB Richard Ellis, big like brokerage. They have like an investment arm that invests capital for, you know, pension funds and whatever. Very big, big platform. And there was an analyst role. Sorry, it was an analyst intern role. And there was a guy who ended up getting the job. It was between me and him. I was an undergrad. He was an MBA who had a full-time job in the appraisal department and wanted to pivot, and he got the job. And I was like, man, I'm competing for an internship with guys that are like, they've been working for 7 years, they've MBAs. Like, this is an unfair challenge. But, I interviewed with, a few different places and ultimately landed at JP Morgan. And it was good. It was really good.
Those are interesting times for sure.
It was wild, man. I mean, it was, I thought COVID might end up being like that. And they decided to print 10 trillion, which caused other types of issues. Um,
We'll
we
see
have
how
a
long they're lasting for.
we have a playbook for that too that exists, in financial history if you're a student of it, like I am. But yeah, I mean it's like it's been a really interesting uh journey since I joined. Like it's been 13 and a half years next month, which is kind of wild.
Crazy. That's awesome,
Yeah.
though. Congratulations.
Thank you.
Um, and then, like I said, so this stuff here, it's like, yeah, I got this. I got
No,
this.
not at all, actually. I bring a lot of humility to it because like it's such a dynamic business, as you know, and things change so quickly. And, you
Sure.
know, it's a people business, which is like the thing that I'm most drawn to. I'm relatively like open about what it is that we do. I'm more just like I just love business and I love finance. Like finance can be super interesting. Um, so, you know, I think if I were to kind of lay out like the mission for the company, it's, we want to be kind of a preeminent non-prime lender supporting business financing. There's basically three tenets to the strategy. Strategy one is best-in-class risk modeling, analytics, risk-based pricing. We want to
Okay.
build circuit breakers into the business, so if you have a great financial crisis type event or COVID crisis type event or some weird blip, like random tariffs coming up, like you have risk controls in place that money going out the door is money well invested. Um, the second tenet to the strategy is like operational excellence. So like, how do we deliver the product as efficiently as possible? How do we, empower people to do their best work, with systems and, knowledgeable processes and kind of all that fun stuff. And the final one is the kind of human capital element of it, which is the one that most excites me and the one that I hope to make the biggest impact on throughout my career. In that, like, how do you attract the best people? How do you keep them engaged and motivated and let them feel welcome and participatory and, you know, just do a great job and, not just be happy, but also feel um, kind of empowered and um, just totally fulfilled with what they're doing and proud of what they're doing. I think all those
Sure.
components
I mean,
are important.
you can find the people, but if you're not challenging them, putting them in the right, setting,
Yeah,
they also are going to go somewhere else because that's what good people do. So I agree with you
totally,
100%.
totally, totally. And I mean, there's so many books about this. Like everyone has their own style. I'm convinced there's no right way. There are many ways. Um, some people are like hard driving. Some people are, they lead with, just find your passion. Some people are like, they think it's important to do hard work. They think good work is hard work, and the reality is, I think there's so many different types of people and there's so many different types of organizations that like you just have to find the people that are talented and kind of view the world somewhat similarly, but just different enough. So there's like a little bit of kind of difference of thinking, which I think will help you lead the organization in making better decisions. You want a variety of thought. You don't want groupthink, right? You want people challenging your assumptions, like, you know, and in the role that I'm in now, which it's been 18 months, like I think that's probably the biggest kind of virtue and kind of thing that I've been searching for, is like how do we build an organization where those are the values? How do we maintain the values? How do we honor them? How do we manage to them? How do we attract people that think they're admirable, right? Some people can think they're scary, right? It's probably not going to be good. We either have to help them not feel scared, right? Which we can do if they're willing.
Cool.
But yeah, I mean, it's all that stuff is super interesting to me.
So I guess I'm kind of bouncing all over the place here, so I apologize. All right, so you're in just outside of Los Angeles, right? Are you in Los Angeles?
We're in like West LA, so our
West
office
LA? Okay.
our office is in Brentwood, if you know the area. It's kind of a
So
cool.
how are you going and recruiting talent? Are you getting it? Do you have other offices throughout the country, or are you just in
Oh,
California?
yeah, so our headquarters is in LA.
Okay.
It's in West LA. We have about 20 something people here every day. And if we find great talent and it's a role that could be done not in Los Angeles, we make those types of exceptions, especially if it makes sense for the role.
Sure.
Um, yeah, I think in the future I'd be open to, other ways of doing this, but I think like, the other kind of principle that I've come to realize, especially during COVID, is like you kind of have to do what the business needs and kind of what in the context of what's going on in the world and what the challenges are. So if we have to work
Sure.
from home, we don't have a choice. Let's adapt.
Sure.
If we're trying to move the needle and it makes sense for all of us to be in LA as much as possible, and we're oriented and we're aligned around the mission and the vision, and we're all A players, we're probably all going to show up because that's what, like, we collectively agree that's what the business needs. And that's not to say that flexibility isn't good. I'm a believer in flexibility. Work from home has a use. I totally get it. But I think kind of where we are and what we'd like to achieve as a company and as a team, like I think it's important to be kind of aligned on the vision, kind of in physical proximity with each other. And I
Sure.
think
Absolutely.
yeah, one of the
No,
core,
it's just a lot easier too, and how to build a stronger culture.
yeah,
Hard
totally.
to do that if you're not
Heard a
working.
great quote that resonated with me. It was, I think, culture eats strategy for lunch.
You
So
can see that.
Yeah. So like, if you have a really strong culture, high level of execution, not the perfect strategy, but it's a good strategy versus another firm that, has the perfect strategy, the culture's not there, probably not going to move the needle much. So it's been a lot of my focus since we kind of made the decision to kind of be back in an office on a full-time basis, which was like, I think 2023, if I'm not mistaken.
Yeah, Michael, one of the challenges on the consulting side that we run into is just change management. And it's one of the first things we tackle when we start projects. Is we can sit there and give a playbook or set that effective strategy. But if there's not the appropriate culture within the walls of an organization that is going to have, I guess, deploy effective change management, then you're just throwing money.
Totally, totally get it. And I think, the other way, like kind of a simple way of thinking about it is, you asked about talent, like how do you find talent? Um, so my first job was in Orange County, which was like the center of real estate ops for JP Morgan and Washington Mutual. So they kind of consolidated everything there. And my boss was actually in Arizona. And he was amazing. He's amazing. He's a great guy. And I could probably tell you, it doesn't matter like um what technological gap that you develop or um Zoom or Google Meet or Microsoft Teams or Skype or what's that old one everyone used? Citrix, WebEx,
Uh,
So like those are all
go to meeting.
go-to meeting. Yeah, exactly. Join.me, join.me. There's a lot of these, like everyone acts like Zoom is like the greatest thing since sliced bread. This has been around for a long time. But at the end of the day, it's about channel richness. And if your job is to kind of get people in, like teach them the fundamental important aspects of the organization, show them the way to make the impact, be there to mentor and coach them. If you gave me two people, so one was managed in-house by a person who's there every day, whose door is open always to their office or their cubicle or whatever work structure it is. And the other one is trying to do this remotely. I guarantee you, the person who's just coming into the organization is going to have a better experience with their boss and coworkers and managers and mentors and the CEO kind of in the trenches with them every single day physically in the same office. So if you're making a strategic decision as a leader and you're like, man, it's like really hard to find people that, you know, are okay not working remotely, you know, it's like I'm not sure that's the best thing for junior talent. I'm not sure that's the best thing for mid-level talent. I'm not sure it's easier to make change, like change management. It's a bit harder, right? Like there's an
Yeah.
engagement issue, I think that when someone sees you in the morning, they say good morning, or they bring you a cup of coffee, or there's donuts there's like, we have a cultural thing here where there's always food in our kitchen. And I'm not sure who
Note
brings
to
food.
note to self: if I'm coming to your office, I'm not going near your
You're
kitchen. It's
welcome
not going to be.
anytime.
It's not going to be good food.
You're
I mean,
welcome anytime.
it's going to be good food, but not good for me food. So
It's gonna be great food. Um, by the way, you're welcome anytime. Um, even if you just need a place to work and you just want to be in an
sure,
office, not
sure.
people,
No, greatly appreciate that.
of course. Um, but yeah, I'm like, I just, think of somebody coming in junior and like, how much do they learn and how much faster do they learn it just being around their peers?
Yeah, 100%. If I my first like couple sales jobs, I couldn't have done that without at least kind of peering over or listening and seeing what's going on or
Totally.
lead by example. I mean, that's just easier that way. Then you just figure out what's your style and you blend it into that. And it's your own kind of formula for success. And you're not going to get that through a screen.
Totally.
Now, I don't have to sit and I'm a hypocrite because I've been working from home since 2011. 11. So I'll have to sit in LA traffic or East traffic or Connecticut traffic, which I was in last week, and I'm like, what is going on here? Like, why? But anyhow, we can keep going all day long on this topic.
No,
But
I'll say you're building your company natively to be remote, right? Because you're on site.
lower overhead. The
Yeah,
majority of
like
us are on the road. So
nothing wrong with that. Like makes total sense for your business application. But like in our business, like fortunately or unfortunately, it's just the nature of the business. We still touch paper. Like we get
yeah,
physical chattel that we have to manage and maintain that's pledged to a bank that like, you kind of need a filing cabinet for that. Like, where is that going to be? Like, it's got to be in an office. And
sure,
like, you can build systems around it, but the question is like, is it optimal? Is it the right
sure.
thing? Like, is it,
Right. What's the timing of those systems? Is it really
yeah,
needed at this point in
totally.
time? Eventually, you want to get to the point where maybe it's not needed, but at this point here, yeah. I um I ask everyone, Michael, who comes on the show to give me a fun fact about themselves. So outside of this discussion and running Maxim Commercial Capital, what do you enjoy doing?
Man, a lot of things. I love hiking. It's been like something I've been doing. I try to just like one day, usually on a weekend, but in the summer, sometimes I'll do it like I'll sneak out like at 5 and we'll try to get out there, but I'll do a hike and or like a beach walk and I'll just be outside and like just it's nice. It's fun. And I try to do it what do they call it now? I try to raw dog it. No technology. I'm not listening to anything. I'm just like totally in the element of being
Yeah,
outside. Yeah,
until you come across somebody like my son and I were at Torrey Pines
beautiful
um,
place.
last weekend, and we were hiking on a Friday morning, and there were people running next to each other talking, and it's like, come on, we're just trying to enjoy the outdoor, trying to listen to the ocean, trying to enjoy the smells around you, and it's like I don't want to listen to you guys talk all the time. So eventually, I looked at him. I'm like, here go the beats.
Yeah. No, there's a place for that too, man. I mean, it's cool.
And I guess my final question I have for you, Michael, is why should someone want to do business with Maximum Commercial Capital?
Also a lot of reasons. I would say the most telling reason is, if maybe I'll split it up. So if you're a customer, um, we can help you get the deal done and get you the capital or the equipment you need. So I think and we'll do it pretty efficiently for you. So that's the first. And then for our referral partners, whether they're vendors or brokers, we can kind of expand your repertoire of what you can sell. So, if you got a laundry list of kind of A and B folks, like we'll help you get the C's and D's done. I mean, those are real deals. You've already cultivated the leads. Like you don't need to throw them out. Like let us help you. Let us help them get it done for you. So
Perfect. I appreciate your time, man. It's nice picking your brain and kind of seeing where your mindset's at. It's refreshing. Um,
I appreciate that. Such
it's
a
just
pleasure.
perspective is refreshing. It's
I
typically we have a lot of good people in this industry, but typically it's similar mentalities. So yeah, I appreciate your time and look forward to seeing 18 months in. Curious to see where you are 18 months, 5, 10 years from now.
I appreciate the opportunity and it's been a great conversation, Jesse, and honored to be part of it. So thank you.
Excellent. We'll be talking soon, Michael. Have a good day.
Look forward to it.
Thank you.
All right.